Good evening, everyone. So today we are going to discuss the tutorial number 7 under the business taxation subject first unit. So this is the overall question is comprised with employment income, business income, and investment income. They are asking compute the taxable profit from each source, compute the assessable income, total taxable income, income tax liability, it means gross income tax liability, and tax payable means net income tax liability. So hope you have this tutorial. If not, you can download this through LMS. So I'm going to show you the Excel sheet, how to compute these questions. Hope it is visible to you all. Firstly, there is a employment income. Firstly, we want to compute the profits for Aqua Limited for the 6 months because we know that year of assessment starting from 2022 April 1st to 2023 March 31st. So in here, as per this question, it's clearly mentioned that he is terminated his employment on Aqua Limited on 30th September 2022. It means April to September, April, May, June, July, August, September. There's a 6 month. So in order to calculate the assessable business income for the Aqua Limited, we want to consider when computing the 6 month time period. So in here you can see a gross salary 300,000 into 6, 1.8 million. Traveling allowance 600,000 into 6, 360,000. Professional allowance 15,000 to 6, 90,000. So after that, there is no any one cost incurred reimbursed travel expense for Bangladesh. Those are not taxable because those are for the benefits of the office employer, not employee personal travel. So we can't tax those things. After that, we want to consider the gratuity. So in here we have 5 million compensation for loss of office. Those are taxed under lower rate because those are uniformly applicable. The offers of voluntary retirement schemes are uniformly applicable for all employees as per the question. You want to refer those things and highlight those things. Those are very much important. So after that, we have under that, we have a compensation 5.5 million. Hope it is visible to you all. After that, we can derive 12.75 million as a accessible income from Aqua Limited. After that, we can compute the accessible income for the Delta Limited. After terminating his employment with Aqua, he joined Delta Limited. So there is 3 months, January to 30th March, 31st March, 3 months time period. So in order to compute only 3 months portion when considering the taxable accessible business income, right? Monthly salary 250,000 into 6, 750,000. You can see here how I derive those things. The vehicle allowance only given vehicle plus and driver. The non-cash benefit per month is 20,000 for the vehicle as well as driver 10,000. Altogether, those are 30,000. 30,000 multiplied by 3 is 90,000, right? Am I clear? Spouse of Sandun vehicle allowance 60,000 per month. 60,000 into 3, it is 180,000. 180,000, right? Right. He lives a rented apartment in California, paying a rent of 40,000. The company reimbursed 25,000. So even though he's paying 40,000, the actual benefit he deriving from the company is 25,000. If there is given a market value, so you want to consider those things. Otherwise, if it is a rated area, monthly gross salary into 12.5 into how many months? 3 months. The unrated area, 250,000 into 10 into 3 months. If it is a state bungalow, 250,000 into 7.5% into 3 months. Because since this is a directly given the non-cash benefit, you can plug the value of 25,000, right? Under the employment share option plan, An option has been given to Mr. Sandun to purchase 1,000 shares at 70 rupees, where the market value is 120. The one share benefit is 50 rupees, because if it is we purchase through market, 120 should be paid, but in here she is only paying 70 rupees. The per share benefit is 50 rupees. 50,000 into 50 into 6, 80%, because he's exercised not entire 1,000 shares. Out of that, 8,800 shares only exercised, he executed. So in order to consider the share option scheme, you want to consider these things, right? I'm rushing through these. I'm not going to in detail discuss these things, because we repetitively practice the hard questions than this one, right? Okay. Next, Mr. Spouse of Mrs. Santur underwent some medical checkups. The cost is to meet 200,000. This is available for managerial level, so this is not uniformly applicable. Those should be taxable, right? After computing these things, we can derive the total assessable income, the, the sum of Delta and Aqua Limited. So this is the summation of those two assessable income from employment, right? After that, we want to compute the business income. Business income starting from net profit 40 million. The capital allowance should be there, because we want to prior to after 2018, 1st of April, 5 years except building and intangible asset. If the building, 20 years capital allowance is there. If it is intangible asset, if it is actual useful life is given, that years we can take as a, in order to claim the capital allowance. If not, it's unavailable of indefinite useful life intangible asset. After 20 years, we can claim the capital allowance, right? So if it is a prior to 2018 up April 1st, we want to consider building for 10 years, right? The furniture selling price is given, cost is given, year of acquisition is given 19 July 3. It means after the 2018 April 1st, you can take as a 5 years to in order to compute the capital allowances. So if in order to compute, there is the disposal gain or not. In taxation, we say disposal gain, assessable charge, disposal loss, capital, sorry, balancing allowance. So in order to check whether there is a balancing allowance or accessible charge, we compare against selling price against the tax down value. The computation is given here very clearly. You can refer these things. I think you know that 20,000 accessible charge, right? Profit of sale PPE, those accounting profits are not taxable. So you want to minus those things when calculating net profit. You add back. That's why to eliminate that, we are minusing that one. The donations are not allowed. You want to add back those things, 1.5 million, as well as the contribution, ETF contribution, those are allowed, right? You want to, nothing to do anything, right? Those are allowed. The selling and distribution bad debts are allowed, but the composition of bad debts, these four things only allow is stated right off. Other threes we want to add back, because provisions are any provision, if it is a general provision or special provisions, those are not allowed. And irrecoverable staff loan is not incurred in generation of the production of income. So those things we want to add back, right? The finance expenses, overdraft, those are we can allow, because those are incurred in the production of income. Those are allowed. So after adjusting those things, we can derive the accessible business income. Here, this is the accessible business income. After computing these three, two, we have finally the investment income, net profit, net dividend. So we know that dividend are subject to 15% withholding tax. So 255,000 divided by 85 multiplied by 100 in order to get the gross dividend, as well as interest. Those are subject to 5% withholding tax. Those are not final taxes. We can claim the 5% withholding tax credit when computing the net tax payable, right? Gross tax payable convert to net tax payable. We can reduce the interest on 5% withholding tax as a tax credit, right? So the bare land capital gain, the computation of capital gain is clearly given in the Excel format. I'm rushing through. I'm not going to discuss in detail. The the selling price is here. If it is acquired prior to 2017, September 30th, you can get the market value of as at 30th September 2017. It is given in the question 4.5 million. We take that one as a deemed cost, and we want to deduct any incidental expenses if it is incurred in disposing this bare land, right? So those are incidental, those are necessary to incur when in relation to the dispose of the bare land, right? The brokerage fees, advertising fees, legal fees, so on, right? After computing these three, you can see here we are computing the assessable income and employment income after the qualifying payments, tax free allowance, government donation without a limit. You know that approved charity donation, but you want to keep remember the approved charity donation are allowed, but in form of money, you can't deduct entire portion. There's a limit ceiling, one-third of assessable income or 75,000, whichever is lower. As per this, it is up to 75,000. After the final dividend, those are final withholding tax, you can once deduct it. Now, after you derive in the taxable income, after that, the applied the relevant tax rates, and you can derive the taxable income. And after applying the if it is there is a capital gain, you want to apply the 10% terminal benefit. First 10 million, 0 rate. Next 10 million, the 6%, remaining on 12%. This is the computation of the terminal benefit tax. Tax payable for the terminal benefit, 30,000. And remaining on standard rates, 500,000 rates. Here you can see, I think it's visible, right? Here you can see here. First 10 million, remaining on 36%. After that, you can plug the values. And I told you previously that the interest at 5% withholding tax, those are considered as a tax credit. And a bit advanced personal income tax also a tax credit. After that, you can compute the net income tax liability. Hope it is clear, because this is the not a full discussion. This is a revision kind of a session. And thank you. Hope you people get a good understanding how to compute this, and have a nice day. Good luck on your upcoming examination. Thank you.